Good morning and welcome to MasterTrader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capper. Let's take a look at the broader markets. And I have a chart of Bitcoin up here. Always in the news every day. Everybody's interested in Bitcoin. Behind you can see the actual futures contract that's trading here, where it's bouncing off of 8,000 a bit here. Of course, the question everybody wants to know, is it time to buy? And at this moment, the answer right now is a resounding no. Right? 8,000's what's considered a whole number or a big round number. There's going to be a focus on it. As master traders, we're focused on where support is, where there's reversal. The problem here with Bitcoin is that in a very short amount of time, the price went vertical, straight up. This is a weekly chart of Bitcoin. Now, what we can see is there's a little bit of support right here, these overlapping bars. When I flip to a one-day chart or daily chart, you'll see there's a little bit of a base, and there's more significant support down here between 2,000 and 4,000. I'm not saying it's going down there, but if it was, that's where I would be interested or start to get interested, between the 4,000 and maybe 6,000, somewhere in here, depending on the price pattern that it formed. So here's the daily chart, and you can see a steady flow to the downside of lower highs and lower lows. And down here at 6,000, you've got this little double bottom where the advance started in November. So it went from the 6,000 area to 20,000, and sometimes prices need to make a full, we call it round trip, back down to where it started, and that is where you'll see more buyers begin to step up at that point at those support levels. Now, you've probably got a lot of crypto people out there saying, oh, Fibonacci levels and trend lines and this and that. Well, none of those levels stopped it on the way down here. We don't use Fibonacci levels. We look at support and resistance. When there's nothing to the left, there's nothing to the left. You drawing an imaginary or line on your chart, imaginary from the point of view there's nothing lined up with any support, doesn't make it support just because you can connect dots, so to speak. So be careful of that with the type of analysis that isn't based on reality, and price is reality, not drawing lines on your chart. So let's see where the broader markets are at here. So here's the futures chart, and there's only a little bit of data because that's when it started trading. But you can see there's a little intraday bounce going on right here. This isn't that actively traded yet. There isn't a lot of liquidity, but there's a little bounce off of that level, even because on a short-term basis, you've got a little measured move here, and it got short-term extended, and you get some short covering, and you get a little bounce. It's not that meaningful from the point of view of an actual trend reversal. Let's look at the S&Ps, and so they're correcting here, and everybody's, the market going down. Markets go down, and this is a normal type of correction so far, which started with what I call a breakout bar failure. And that is several bars, usually 2, 3, 4 at the most, that go sideways within an uptrend, and they suggest prices are going to go higher, and then they did. Now, when the pattern happens, we don't know it's going to be a breakout bar failure because this could have just continued to go up. But when it's an inside bar, after the breakout bar, when it trades below the low, it's time to step aside. If you're a short-term trader and you bought that breakout, that's my rule. Now, the pullback is to the rising 20 MA. And moving averages, just like Fibonacci lines, are subjective. So what do you do here? You look to the left and see, is there any real support there? And we see some consolidation. And you can see the futures are beginning to stabilize here. Doesn't mean they're going to hold and turn around. It just means that there's a little shelf of support here. We're still getting lower highs and lower lows within this 60-minute time frame. And unless it can get back above here, it's still in a downtrend. It could form a base here, and then we could get interested. But if it keeps going down, the next stop could be this area right here, 2769. This is where the prior lows were. So that's how we approach things here at MasterTrader. We look at support, resistance, and trends. We look at where people put their real money to work. And that's what we see on prices, and this volume here represents the interest with real money. And let's take a look at the NASDAQ, since we've got big influence here on the NASDAQ with Amazon going up and Apple hanging in there and Google going down. But it's also pulled back to the 20 MA, and you can see this little shelf of support right there. And the Dow, it's actually holding here a little bit better. It's holding in the area of yesterday's low, and here we have the support as well in the Dow. So let's take a look at Amazon, which was moving down yesterday, and on the earnings report, right back up to the highs, making a new high. So those that got bearish on this, looking for it to go down because of this down move, now in some pain for sure. Apple, down to some support here. Look, it was up, and now it's come back down again. So really indecisive. We're concerned about the depth of this retracement here. Prices should not pull back that far, and here we have a real breakout where it's a little bit sloppy base, but sideways, and then it came in hard, and now it's holding the support. We'd really be interested in Apple down here around that 200-day moving average, the red line, that's in alignment with this support here. We might be willing to pick up some shares down there, but we'll see if it actually gets down there. Google, it's down here on its earnings report, so we do have a bit of a correction going on, which is normal. May not seem normal to everyone since we haven't had much of corrections. However, it is normal. These indices and stocks are in uptrends. Well, Apple isn't. It's in a sideways trend. But you do get corrections within uptrends, and it's normal, and it sets up buying opportunities. Last stock I want to look at is GPro. It reported its earnings, and I've said that about a week or two ago, that this was in a death trend, maybe a month ago, and it just continues to be, and it looks really bad. And you have to be careful in the markets. You have to have a plan and rules, because what was a recent, very popular stock doing great, as this was back here, to get caught up in it and think that everything's okay, anything can go down. Excuse me. General Motors went to zero, and so GPro can certainly go to zero. All right, everybody, have a great trading day and have a great weekend, and we will update next week.